If you're going to be spending, looking to seek investments of millions of dollars to create something, it has to come with a high level of confidence and credibility. I'm not relying on new technology and new R&D. I want to take what we have available, I want to harness it, I want to convert it to rapid value growth, where I'm not relying on the uncertainty of, will this technology actually develop or not?
If you see something that looks like it could cannibalize, it's hard for companies to justify, if you will, making investments there when it could be affecting the performance of this other group that has their own KPI.
I'd love to hear from both of you. What are the most common reasons that dictate a spin out, right, from a core organization?
I would say it often is the talent discussion, which is Peter, thank you for joining us. I'm very much looking forward to this conversation. You've been at WL Gore for 28 years, which is incredible. And I know we've spoken before about all, the variety of stuff that you've worked on. And so that's what we're excited to dig in today, particularly around the different divisions that you've worked at there and the one you're working at right now in fabrics and the new ventures that you've built that have created growth opportunities for the company. So with that, maybe we start, given your background and history at the company, how is innovation structured at Gore? And where does new venture building actually sit into that structure and infrastructure?
Yeah, great. Thanks, Ben. Hey, great to see you, Ben, and great to see you, Marcus. Thanks for having me on the show. So when I think about innovation structure, maybe we'll start a little bit, we'll back up about, we'll look at Gore at a 10,000 foot view, right? So we have the enterprise, right? Which is and then within the enterprise, we have operating companies. So we have the Gore-Tex Fabrics division, we have the Gore Medical Products division, and then we have a consumer what we call performance solution division, which includes a lot of B2B and a lot of market verticals and clean energy and auto and electronics, et cetera. Within each of the divisions, there's individual innovation teams. And then we also have in our enterprise core, we have an incubator, which houses ventures that are outside of the existing businesses within our divisions. And those are limited. And I used to work in that area before moving over to fabrics. So if we look within the fabrics division, our team is called the futures team. And we're really looking at, what I would say more strategic innovation or explore innovation, right? So these are new businesses, new products, new ventures. And within our core of our ingredient business, we still have, it's called innovation as well, but we have it's more geared toward product, derivative innovation within our existing, business model. So things outside of that kind of fall within the futures team. And I would say that structure is very similar within each of our divisions, right? So you have a team that's dedicated to kind of derivative and core. Then you have a group that's maybe looking a little further out into adjacencies. I would say, like a lot of corporates at this time, we don't have a lot of moonshots or if any going on, right? They're in that adjacency space, really looking to redeploy our competitive advantages and capabilities in new ways to create new value in new ways. So hopefully that gives you a little sense of where things are.
No, that's a great perspective. Thank you for sharing that. I mean, just given the fact that Gore operates across different markets, for beyond the core, how do you really prioritize the innovation?
Yeah, that's a really good question, Marcus. And I can only speak to maybe my experience and where I've been in our organization, right? But if I'll back up and say, before I come out of fabrics, I was working on what was then called our Enterprise Innovation Center of Expertise, right? This is where we're looking for new large scale growth outside of our existing businesses. And a lot of that's driven, we had a lot of creative leeway at the time, right? We have the ability to kind of leverage and repurpose our capabilities into adjacencies of where we're currently playing. And in my time, that was in ophthalmology, right? We don't have a medical business in ophthalmology. We're primarily in cardiovascular and general surgery. And this is looking to repurpose those materials and know-how into new areas. It's really, I would say, driven by the associates, right? And the scope and scale of the opportunities, right? We're not looking for, 10, 20, $50 million. We're looking for $100 million or larger. Ideally, it'd be nice to see it be behind those growth opportunities to make them really strategic levers in driving our growth. And then within fabrics, it was a little different, right? In fabrics, we're very much aligned to the strategic direction of our core organization, right? As we have been a really prominent ingredient business player in the premium apparel outdoor space. We're strategically moving to not only providing comfort and protection, but providing comfort, protection, and sustainability. So how do we move our organization to sustainability? In our case, in the Explore team, how do we embrace circularity, the circular economy, and new business models to really separate revenue growth from volume growth? So a lot of our ventures are ideated by passionate individuals that look in that strategic sort of direction in the playing space and say, what are the problems and opportunities that are there, and which ones can provide, significant strategic growth to kind of fit our kind of growth gaps that we're looking for in our out years. And then, as you know, like a lot of that's trial and error, like you start and you see which ones kind of pop up and have the evidence to support increased or continued investment.
So what of the decision power was really at the embedded entrepreneurial leadership level, each of these groups? I'm just curious, did each group have a dedicated capital pool?
So our enterprise allocates maybe across the opcos I would say it's R&D, right? And R&D is innovation, right? Everything's included, core and Explore. And then within Fabrics, right? Yeah, within that allocation, we have dedicated funds to the Explore areas and dedicated to the core. So we have that set spend, and then what can we do with that, right? What's the number of ventures? We have limited resources. How we maximize that within that spend, right? Decision making relies within our team, and I would say the ventures continued investment stays within our team as well, right? It's only when ventures progress forward, and we have a stage gate innovation process, like a lot of folks, where we have kind of concept development. We call it like lean stage, and then a round A, round B, and round A is first order uncertainties, death blows. Round B is sort of second orders, and then scale. When ventures progress through to probably around A or B, right, they start to become real, meaningful, right? They can provide strategic options to the division that could be called upon, and that's where things will maybe escalate, right? Because you're asking for increased funds that aren't typically may or may not be involved in the current budget, and we may need more. So that's when we escalate to engage with our divisional leadership team for alignment and support.
So it sounds like each opco is operating independently, but has similar innovation processes. So whether it's stage gate or some of the other stuff that you're doing, but the areas that they're pursuing, how close or how far away from the core, how they fit in strategically, are dependent on the opcos, the business units themselves.
You've got it. And I would say that there is some direction for the enterprise, but they're not specifying the where or the how, right? So as an enterprise, our goal, right, we're a material science company, driven through material innovation, product innovation. And, our kind of brand or motto is together improving life, right? So we're really targeting these meaningful problems where our material science and technologies can come in and help improve life, whether that's in medical implant or life sciences or auto electronics, or in our case, comfort and protection in outdoors, or in our technical oriented applications like defense or fire safety, et cetera. But yeah, you got it. The direction or defining sort of your way to play, how to play, kind of strategic, however you want to define your kind of like value pools that you're going after are defined within the operating units in alignment with sort of the operating kind of strategic goals.
Got it. And then the stage gate process, because you are in the material science space, so I imagine there's a decent amount of R&D taking place early on. So this is like a multi-part question, but I'm curious, like, what does that first stage look like, and how comfortable are you guys killing stuff that doesn't get to stage 2 or stage 3? Because we find a lot of companies really, they start the process, they have a methodology, and then they're just pushing things through the pipe because they need to push things through the pipe, as opposed to being rigorous about it, especially when there's a decent chunk of R&D up front, which feels like that sort of sunk cost fallacy. Well, we already spent so much on R&D, we got to commercialize something. So how do you think about all of that?
I think it's a great question. First, I'll state that I don't work in the R&D aspect of it. I have in the past, right? This is where to me, this is traditional R&D material, right? Long-term cycles, a lot of uncertainty, and I'd say we've gone through some phases where it's been very tech push versus market pull. And I think as an organization, we've really come about and are really focused on consumers and market pull, right? We understand where the macro trends are going. We understand what we need across our different opcos, and then we have a central unit that's really focused on material innovation and R&D, and in CVC as well, to be able to support those. I would say where I'm at and where I'm focused on new venture building, I'm not relying on new technology and new R&D, right? I want to take what we have available. I want to harness it. I want to convert it to rapid value growth, rapid value creation, where I'm not relying on the uncertainty of, will this technology actually develop or not, right? I'm more about the converting. Let's take this capability, this competitive advantage, and how can we monetize it in the near term?
Right. So solve a user, a customer problem first, not I have a solution or have this technology, where do I point it? You're thinking more about, maybe we have some assets that we know work in one area, we can shift them to another area, or we have a consumer, user, a customer problem, and then we got to go figure out how to solve it with the things that we have or things that we can build.
Yeah, you got it. So I'll give you two illustrative examples. So one, my time in ophthalmology, right? We were looking to solve problems to new medical implant devices, right? So the leveraging existing membrane and material coatings technologies that we've used to support, right, our cardiovascular stent graft business or our medical hernia products business. How do we take those and repurpose and reconfigure and create new ventures there? And there's a lot of development, I would say, in that, right? But it is very close to the material science and enablement that we have available. Now that I moved over into our fabrics division a couple of years ago after getting my executive MBA, we've really been focusing on new circular economy service business models, right? So we're not actually physically creating any product, but we're trying to enable an ecosystem to keep the products that we enable being made in service longer, right? And in doing so, how do we create more revenue per unit than in a traditional sort of ownership one-time buy mentalities, right? So we can try to help an industry do less harm by separating revenue growth from resource consumption, and that relies. I was thinking about this the other day of, if you say what's your tech stack to most people in a material organization, this was me too, like not too long ago, right? We'd be thinking about physical technology, like how do we laminate this and how do we press it, or how do we do these other things? Not necessarily how do we create a business model that's enabled digitally to be able to create a service. So
right, yeah, very very different business model, and even the way that you deploy the solution. That you're talking about a service model of some kind as opposed to a hard good, an R&D based, science based product.
It is, and to be honest with you, Ben, it's pretty new for our organization, right? Just a couple of years ago, for the first time, we did a digital smoke test, right? Where, to give you a sense of where we are, it's been very traditional product material based organic growth. And now we're looking at new digital service business models that build off of that technology and the products that we enable. But we were not set up internally for handling privacy data concerns, right? I went down the road of talking to our privacy compliance, talking to our legal, and the capabilities that were needed to even run simple smoke tests didn't exist, and the amount of time and effort it would take to do that would be beyond me. Right. So that's where we really went into partnership with external venture builders to be able to help augment our capabilities and accelerate our learning, but as an organization and those capabilities, but also in actually, creating and progressing, ventures that are, more digital service business models.
Peter, I mean, you've had such an incredible tenure. When you kind of reflect back, really, what do you think is unique about the model that's helped you resource and kind of scale venture building?
Yeah, really great question, Marcus. I've been here, as I said, 28 years. I love our culture, right? I love for people that want to be unconstrained, by traditional growth pathways. Gore is a wonderful place. You're able to leverage our culture to be able to, take on new experiences and drive growth at a pace that's comfortable with you. And as long as you're demonstrating success and developing followership, you'll get the support to do that. So over my time, I worked in many different divisions, many different areas, right? And as venture builders, we love learning, right? And I love complex problems. And as time has gone on, the more complex the problem is, the more higher level the problem is, and the higher impact and growth potential it has, the more fun and kind of attractiveness it has. But I would say, Gore's lattice culture, right? Our culture that really has the belief in the individual, right, to come up with the initial idea, right, for a new opportunity or growth, and building the evidence to gain support and followership, right? Very much is what's helped me and many others bring things forward. And that's a bit magical, right? Because I'm very big on like unleashing human and organizational potential. And I think all the opportunities reside in individuals and organizations, right? And I think our culture, when Bill and Bee founded Gore, coming from a hierarchical DuPont sort of organization, right, designed our structure through the lattice, through our beliefs, through our principles, to really try to unlock that human potential and create these new ventures that can drive impact and growth for the organization. It's a great saying. It's always make money and have fun.
Not too bad. That combo is not too bad. I'll take that. That's a t-shirt for sure. And so it sounds to me, because you mentioned the lattice framework, and I know Gore is sort of famous for this. There have been case studies on it. If I boil it down on venture building, can anybody put their hand up and say, hey, I have an idea for something that I think is interesting? And then if yes, what's the hurdle or what are the steps for them to say, cool, Peter, that sounds like an interesting idea, but I can't, I'm not giving you $100 million. You got to go do X, Y, Z, or how does that work in this sort of, and then maybe a little bit on the lattice structure, because you're not getting top-down instructions, go build an ophthalmology venture or go build a reuse recycling venture. Somebody is putting their hand up and saying, I have an idea, I want to try it. But then there's got to be some process for, validating whether that's worth pursuing and investing in.
Yeah. Great question. So I'd say everyone is definitely encouraged to support innovation. I would say when I think about derivative, innovation and new venture building, where you can put together completely new business models, new services, that there's so much uncertainty. We know in that, right? I would say that most people can raise their hand and get involved in new product development. I would say that, if you're building new ventures, you can certainly contribute to and move forward there. But you typically, right, the folks that are really driving those have the battle wounds and scars, right, of working in very diverse roles across different functions, and have built not only their acumen, right, to draw from, but they've also built a relational network across the enterprise to leverage, right, to be able to get buy-in and support, right, to know that the credibility of the evidence you're putting in is sound, right, and it's minimal bias. We all have biases, and to have a demonstrated track record of doing that allows our sort of premium venture builders to gain that support and investment and followership to do that. And while anybody can work on that, I think it takes a very unique individual to be able to do that successfully and navigate a lot of the corporate challenges that are there, especially if the systems to support venture building aren't necessarily mature, right, in all parts of our organization.
Right. So there's a relationship game component to this of who do you know, who have you worked with before, where have you been successful before, to give you some of the leeway and some of the support that you're going to need to pursue, especially the beyond the core sort of crazier ideas.
Yeah. I mean, I don't want to make it sound like it's political, right? But it is relational, right? And if you're going to be spending, looking to seek investments of millions of dollars to create something, it has to come with a high level of confidence, right? And credibility, right? And that happens over time, right? I mean, even our most experienced venture builders don't just get carte blanche on investments, right? They've got to do the work. They got to put the evidence in front, and they got to stage, they got to increment their way through. But I think when you have a leadership team that has demonstrated credible venture builders, where they practice sound practices, they have strong evidence, right? They know their own biases, they try to minimize them. There's a lot of trust that develops there, and things I think can move more effectively and efficiently. And if you don't have that, I think it's very hard. I think you run the risk of, in those early days, you think leadership's along with you and bought in, right? And then you ask for that first big check and all the brakes go on. You're like, then the real story comes out. So
That's happened before. Is that what you're saying? That's happened?
Never
I think
happens.
that
What are you
happens to
talking
all
about,
of us
Peter?
at some point in our career, right?
Yeah.
So, Peter, I mean, you have kind of culture that's really this tailwind that's really pushing things forward, and you've empowered people to raise their hand to kind of instigate new ventures. Can you talk a little bit about maybe some of the unique incentive models, or is it just that the culture is so strong that people are so driven to kind of push forward to solve user problems?
Yeah, it's a wonderful question, and our incentive structures aren't as developed, I would say, and formalized as maybe a lot of other organizations where, if you're taking a risk and working in ventures, right, Gore doesn't provide equity or, increased incentives there, right? I mean, everyone's still judged on a peer-to-peer, sort of ranking system, or, we look at our contribution, the impact of our contribution, right, as individuals. And that's what drives it, right? So if you're working on something that's driving significant enterprise value creation for the enterprise, right? Or is increasing, not only our growth, but is increasing our brand strength, right? These are highly impactful contributions, and your incentives or compensation will follow that, right? And I think there's also, we're a unique breed, right? I mean, we don't like doing the same things twice, right? We like to be driven by, I don't speak for everyone, but like I'm driven by solving higher level problems that matter, right? I'm not just out there to put growth on the table. I'm out there to drive impact. And as a result of driving impact and solving problems, it creates value, and that spurns growth. But to me, it's problem and impact first, growth will follow, right? I think if you get that flipped around, you end up chasing the wrong things, so to say.
And have you ever looked at spinning companies out? So, because the ophthalmology example, that's maybe a business unit or a line of business inside of one of your opcos. Have you ever looked at the idea? Has Gore ever looked at the idea of, hey, you know what, we got something here, it fits, but not that strategically, or we want to share risk? And you mentioned CVC as something that the company is doing, which means they're investing in external startups as well. So have you ever looked at the spin out model before?
I'm in the middle of it right now, and so I thought about it before, right? Organizationally, I think we thought about it, but I don't think we've ever, acted on it, right? A lot of we certainly have a joint venture in our past that's ongoing, but we don't have a regular history or muscle or capabilities developed of spinning out. And one of the ventures that I'm helping lead right now, right, is in the area of premium performance apparel, in partnership with a number of the leading outdoor brands, right, to create usership models, right? How to create access to products over ownership in a way at a system level, right, can separate revenue growth from volume growth, where everyone wins in that ecosystem. The brands, the consumers, Gore, and the planet, right? And how do you do that at scale with our unit economics, right, with enough value creation that works? So we're an example here is like in fact, I just did this just recently. If you look at our value chain for an ingredient business model, and you run through an analysis of risk of what's needed for your venture and what is the value chain designed, right, to deliver, where are those misalignments, right, or alignments that can be leveraged, and where's the risk? And you'll see that ingredient business unit has a lot of strength and brand and relationships and science. But when it comes to actual capabilities and structures of what it's designed to do, it doesn't match up at all, right? So now, what are your options as a venture builder, right? Do you try to create all of that within the mothership, where all your functions, your legal, your HR, your procurement, your talent, everything is kind of geared against you, and like a lot of your hiring and people you have are incredible, world class in certain areas, but they're maybe not matching up with what you need in a digital service business model. So that's driving discussions of like, hey, we got to recognize these differences. How do we best support the venture for success? And spin out could be an option there, right? There's also looking at ring fencing internally. Maybe wholly owned subsidiaries. Perhaps I'd love to hear your thoughts. Right, I've been listening to your show, and I know there's a lot of people that's got a lot of experience in that. But I would say where Gore is, this is still relatively new, right? We've got these complex ventures that are coming. I think we're recognizing the differences, and how do we grow and support these differently, in a way that can still create value for the organization and achieve our strategic goals, right? And have the venture be successful, and not independent, right? I mean, if we're successful in this venture, and actually help shift an industry more towards circularity, we want that growth and credibility to be associated with Gore and not a standalone
Yeah,
kind
of
company on
course.
its own. So
You don't want it to be so far away that you don't get the lift from that, whether it's brand, reputation, certainly revenue and other things as well.
you got it. So to me, it's probably somewhere in between, right? I mean, we're going to probably ring fence this internally and bring it to a point where, we've got product market fit, we're scaling, and it makes sense. If we want to grow beyond that, and we need more autonomy, maybe that's the point of spin out. But I'd love to hear from both of you. What are the most common, reasons that dictate a spin out, right, from a core organization?
Yeah, I would say it often is the talent discussion, which is, hey, we make physical goods, and we just invented, let's say, a software platform, but we don't have the resources for doing it, and we can hire them in house. But now those are new capabilities. Go to market is different, distribution, how it grows and scales. So that's one, I think, which is the it's not about the talent being bad inside the core business. It's just you need different types of people with different experience to build different types of businesses. So we often see that. And then I would say the other one is in a bucket of regulatory compliance and legal, where the company starts to get uncomfortable with maybe the risk or the potential exposure that they have to something that they're not used to or comfortable with. And they say, well, maybe if we spin this thing out and we have a partnership, then there's, we're not taking on that risk, a compliance, regulatory, or what have you. And again, that's usually because they're building a business in an area they are, they found themselves in an unfamiliar territory. So those are usually the reasons why I think people do it. I think the other one is companies often look at the speed with which they can operate versus the speed with which a startup can operate. And I don't know that you agree with this, but in my experience anyway, a startup is always going to move faster. It doesn't mean they're moving better, but they're always going to move faster. They're always going to experiment and iterate more. And so sometimes I think big companies look at it and say, we might kill this by accident. And so it might have a better shot at figuring this stuff out on the outside.
Yeah, I mean, I think speed is the greatest advantage of any sort of startup, specifically at that earliest stages. The other things I would add actually comes down to what you even alluded to earlier, Peter, with respect to the ecosystem. Specifically, when you're looking at circular or looking at opportunities beyond the core, I think there are other assets that you can't really own. You might need to control or get amplified by kind of making 1 + 1 = into something net new. Specifically when you're looking to go after kind of new undefined markets, as well as I think is another reason. It's like the core business is so great at executing the machine to do what it needs to do, but how do you actually create a different environment to go after something? If it's a different market segment, if it's a commercialization of a new technology, even in some capacity into a different industry. So, I mean, there's so many different reasons. It's always contextual, but I think even how you framed it earlier, Peter, just on, you have such a great foundation and being able to tap into an ecosystem. And then now that the developments with circular, I think naturally will maybe lead to more kind of spin outs in your portfolio construction of new ventures.
Yeah, no, great points, great considerations. And it's resonating, right? A lot of what you're mentioning, we're living and we're going through that. I think one of the challenge and the opportunity here is education, right? And bringing an organization along, right, that doesn't have a lot of history in doing this. Like, why is needed? What's needed? Versus by falling into our traditional like organic, let's build it in house, right? And then how do you communicate out all of these differences of what's needed to support a venture and how they're different from your organization? And I describe it death by 1,000 cuts, right? If we keep going down this road, we're going to get in our own way and we can kill this. But it's not a trivial decision, and the amount of investments that we're talking about is not trivial either. So, I think the speed or pace at which we're learning as an organization and converging and aligning on a path forward just takes time, right? And I think we're moving and continuing to move in horizon-based, right? Largest uncertainties, major milestones to build that evidence, to build the confidence to follow, to be able to support that. And one thing I'm learning is you can't get too far ahead of your skis and where you see things going. You really got to focus on the next milestone, bring the organization with you to that. Even though you may be seeing 2 or 3 horizons out, stick on that first one and get there organizationally, and then worry about going to the next one.
Yeah, it's actually why I asked the question earlier about, the capital pools and where they actually sit. Because again, that's another reason, and looking at spin outs is really taking a bit of the shared risk in capital. How innovation is getting funded now, specifically growth innovation. We see a lot of kind of headwinds in the macro. There's a real good case to be made after you get some momentum, maybe after this first spin out. How do you look at getting a better balance in the portfolio construction, having more shared risk with the capital deployment into innovation?
You're spot on, Marcus, right? So in parallel to kind of moving this venture forward, I'm also like very pulled into like venture, advantage venture studios, right? And the concept, right, to be able to overcome a lot of the challenges of the innovator's dilemma, right? And I spent a lot of time talking to folks from Alloy and Disruptive Edge and others, right, to kind of appreciate how we can take that competitive advantage, that corporate capabilities or assets often that are going unused and sitting there in an organization, to seed startups in a studio that's really built for speed and a system around it to really convert those investments into new S-curve growth options. And I think I got a little bit backwards, right? So I'm currently working on a venture that's moving that route, and we'll kind of show by demonstration, if we can spin it out and make it successful, if that's the route we choose. It's currently where we're headed. Then does that open up organizational acceptance, right? Or consideration of alternative investment models, right? For driving in new ventures, right? I think to me, right, if I were writing the check, I'd be ready to like work, put together a venture studio, either our own or in partnership with someone, because I know the likelihood of converting that into meaningful impact and revenues can be much more efficient than us doing it on our own. To convince an organization to do that with your traditional product-based material science, very, very challenging. So I think we've got to, learn and demonstrate an example with one venture, and then maybe you can get up to like, hey, let's do 10 of these, right? Let's create a portfolio. So we've got to stepwise our way there.
Yeah, you have to build momentum, but also what you said earlier, I don't think it's mutually exclusive, right? It all depends on the nature of the venture, and should you build this in-house, you should also look at opportunities working with partners on the outside that can help you even support into co-builds or other sort of kind of, initiatives that create value or at least build momentum.
Yeah, absolutely, right. And I'm working with a external firm right now, right? I brought in a couple firms over the last couple of years, and one of them we're supporting on this one, and we wouldn't be able to move forward without that external support, because they have the capabilities, the digital resources, right? They have the data privacy separation, right? That we could do in-house, but the amount of effort it would take us to get legal and compliance and everybody, we'd still be in that mess, right? We wouldn't be where we are. And this venture, right, we've been able to go from zero to first revenue in 14 months, right? Which for Gore, that is incredible, right? It's pilot phase, right? But it's like, we're actually out there learning in the real world, which is incredible, right? It's I think about my ophthalmic days. I was just talking with one of my innovation leaders earlier today. There's a lot of technical uncertainty in building a new medical device. In our case, it was working in a new glaucoma drainage implant to be able to help treat glaucoma. And most of the uncertainty was focused on the technical aspects, right? Of how do you create this thing that does what it's supposed to when it's implanted, and demonstrate that through preclinical and clinical feasibility. The business model side is less of an uncertainty, right? Because if you have the data and you have the reimbursement, the mold's created. You just got to replicate it. When we're now looking at moving from linear to circular economy business models at scale, there's no precedence, there's no history, right? It's all unknown, and consumer behavior is tied into it as well. So it's just a lot messier, I would say, in our learning, right? What we've built in evidence through the different stage gates feels very linear, looks very linear, and then you actually get out there and you're actually in the real world learning and like providing the service to consumers that said they wanted. And getting very different results, right? That's the heart of innovation right there. We're in the mess of it, but it's the fun part. I'm really hoping that we come out of this with an insight and our aha that shows us the way forward where everyone can win, but only time will tell.
Yeah. You have medical devices and circularity, very different businesses. One, the desirability is very high on the medical device because I have a condition, and if you can fix it, it's more of a feasibility issue. When you're looking at other businesses or other business models, the desirability part of it is much higher, or the viability part, which is how do we make money off it, and does the math make sense? I was curious about that on the circularity side, which is what you're focused on. Was there a conversation at Gore about the potential of cannibalization of the business model? So, I mean, again, like I think of apparel, clothing companies, and they sell units and they talk about circularity, of course, because we know that there's a lot of clothes that go into landfills and stuff. But that's an effect on the business model because you can't sell the same item 5 times. Maybe you can, but it's not how the business works today in retail. So, did you have a conversation about this could fundamentally, at scale, if this wins, if everything is circular in the clothing space, it fundamentally impacts our core business model?
Yeah, no, it's a topic all the way through, right? From initial to like even in today, but that doesn't mean it's good or bad. Right. I think it's just recognizing what it is and how do we manage and navigate that. Right. So I think we've been fortunate. The group of consumers and the jobs to be done we're targeting are net new consumers, maybe those that haven't been able to necessarily access or benefit from Gore-Tex apparel before. So that creates a little separation and a little bit of buffer to learn, right, and move forward without the risk there. But in the long run, right, I mean, I think we'd all benefit from having completely circular systems where it cannibalized our existing business 100%, right? As long as we're continuing to be able to create and drive revenue growth and profit growth in proportion before. But that's the challenge. I think, it is on a topic of discussion where we're building evidence to try to understand its potential impacts, but recognize it's just part of the nature of the work that we're doing. But I think, separating and targeting new consumers certainly helps mitigate some of the risks there to allow the learning, because until we get through and really understand what is that winning value prop or number of value props in the business model support, we just don't know.
Right. Yeah. That's it's another case or interesting discussion around spin out versus spin in, where if you see something that looks like it could cannibalize, it's hard for companies to justify, if you will, making investments there when it could be affecting the performance of this other group that has their own KPIs. So that becomes another interesting debate, discussion, tension around, well, should we let this go out and, have an impact on our business, but on the outside, as long as, again, there's some governance and some control and maybe option to reacquire. And there's different ways of doing that. But that's another interesting one that we've seen, where the tension between the core and something that's actually has the potential, let's say, because it's tiny compared to the core, but has that potential or the perception of, hey, you might be affecting my targets over here. I'm not a huge fan of that. Plus, I'm doing all the revenue generating and I'm funding all of this work. So that's another sort of interesting discussion, argument for spin out.
It is, it's spot on. I think one of the ways we potentially can mitigate that, right? Gore has a saying, right? We're all in the same boat, right? And as an organization, if we want to survive in the long term, it's a both and. It's a yes and. We need to drive growth from the core, and we need to drive strategic new growth options that may risk cannibalization. But it's together that's going to allow us to achieve our long term goal, right? And I think with that sort of destination and understanding of we're both contributing, yes, you have a core business that's driven by maybe shorter term profit revenue metrics, but also recognize that, hey, in the out years, that's at risk or maybe not going to be as resilient as we need to. We need to make these investments. That does provide, I think, a bit of a buffer and support to be able to navigate those healthy tensions, right, towards a common goal. Neither one of us can achieve success separated, or without
independently. Yeah, I totally agree with that.
Yeah, I would agree with that, Peter, but I think that's also one of the reasons why it's really hard to have the circular business scale within inside a large organization, regardless if it's Gore or not. I think, do you have any other commentary around just your observations of just scaling, given you're already at such a large scale, you're building so many ventures, you're exploring these kind of spin outs?
Yeah. So I'll tell you what's going through my thinking, right? We'll see how this could change based on the learning as we're going forward. But when I look at the existing businesses and linear business models out there, right, from our partners and from us and others, they're all linear. They're all driven by more shorter term. And to shift or reshape that model from within, I think it's damn near impossible, right? I think that these sort of usership models and similar, we need to leverage strengths and capabilities from everyone in the ecosystem to be able to deliver a common value proposition together, because none of us can do it on our own. We have to do it together. And I think to do it together, you do need to create that separation from your motherships. And this is just one mothership right now. Now we've got ecosystem. We're talking dozens, right, of motherships. How do you create that separation from each of them that can still tap into harness the capabilities and leverage that you need to create a new business model where everyone maybe has some level of skin in the game that's separate from your core? And I think that's where my mind's going, right? I would love to kind of see a spin out that has separate legal, has complete legal separation that is created in partnership somehow with these other ecosystem players that provide some level of skin in the game, right? That contributes to investment. And they may not look the same depending on who you are, right? It may be different, but the return's different, right? But I think it's you have a dedicated unit of folks working at an ecosystem level to achieve the same thing that none of them can do on their own, right? And that to me is that's where the magic and the opportunity and the power comes from, right? When you're thinking circularity, circular economy, that's the only way to move forward, I believe, right? You're not going to change. Think about how rigid our system is in a linear economy. One organization is not going to make a dent, right? It's going to eat you for lunch. But I think when we can stand back, understand what's the outcome of the system that we want, right? To move to circularity. And then how can we collaborate together to redesign a separate system to achieve that? Then hopefully that grows, right, over time. Just like we're talking internally, our internal linear system gets cannibalized. If we have enough of these external ventures that are shifting toward the circular economy, they become the majority, right? And then they take over eventually. It's not going to be just one, right? I think we're going to need many, many of them working in that collaborative fashion to start new circular businesses that are free from the constraints and boundary conditions of linear. And when we do that at scale across many different organizations, I think we get to the outcome and the destination we want, where we're actually doing less harm and ideally being regenerative and actually helping heal the planet.
Yeah, and I think you have already some of the winning conditions. Like you talked earlier about how powerful and strong the culture is you already have. So maybe it's a bit of an evolution of that culture. And again, the question is, how does that culture mesh with some of the other ecosystem players on the outside? But that's, again, an area where you can take a really strong leadership role. I mean, you can imagine some organizations who didn't have that culture at the foundational level. It'd be really hard for them to kind of think beyond the core and even try to execute against that.
Yeah, it's been a really interesting learning journey, right? I mean, some organizations, I don't want to mention brands, but very prominent and invested and leading in this area, have had challenges, right? And they're all on board, and I think they recognize that, hey, it's going to take more than just us. How do we invest in the learning, right? It may or may not work out, but we'll invest in it. Others are like, yeah, I know we want to move that way, but we're a smaller organization. We don't have the time or investments to do it, but we'd love to be part of it, right? So, but to me, it's that mindset and recognition is what's bringing an early group of collaborators together, right? So I think there has to be that willingness, right, and desire and recognition that we can do it on our own. And I think that's what's allowed us to be able to put together a great group of brands to be early partners to trial and test this learning together. We'll see where it goes.
Yeah, but that's one of the advantages that big companies have, is that they have sway, they have relationships with other big companies, and one company can motivate another company to participate in a trial, whereas if a startup was doing something on their own in this space, and there are lots of startups in the space, but for them to knock on the door of a giant brand, be it yours or somebody else's, and say, try my new idea for circularity in clothing, they might be like, guys, we're busy, we don't have the bandwidth for this. So there is some advantage in the scale. We've seen that working with a couple of big companies. in similar areas like AB InBev and Colgate and Unilever, all working on circularity, trying to get materials back, but also deliver stuff in a different way. Like, can I deliver soap not in a bottle on a shelf, but can I deliver it through a refillable container? And so sometimes you just need the scale of these giant companies working together to say, if we don't figure this out, we're going to lose on our core business model and the planet is going to croak. And so sometimes there's some benefit in scale that comes with doing this sort of thing.
Yeah, spot on, right? I think a great area, right? First order opportunities in there is like system takebacks, right? Of materials, collection systems, right? Great opportunities to partner. But to your point, I think I was just talking about this morning in our innovation group. The competitive advantage of just the assets capabilities we have, right? When you talk the Gore-Tex name, right, and you're going talk to prominent outdoor brands, this is my first kind of foray into the consumer side of things, right? A lot of mine's been in the medical device, life sciences side, and our names, we have brand recognition there too. But like trying to do this as a startup without that relational network and the confidence and the trust that comes with it, it's really an incredible advantage for who we are. And I think that's another reason, why I think the work we're doing is so worthwhile, right? Because if you have that power, right, that capability, how do we leverage that to bring these folks together, right, to be able to unlock that organizational potential that can drive the impact that we all desire, right? And regulatory reasons are, in some parts of the world now are continuing to push, but that we can all not only achieve impact, but continue to drive growth and profit at the same time.
Yeah, totally makes sense. And it's funny, that's why we enjoy working with big companies from the perspective of if you can unlock the assets. So maybe there's a big if there, but if you can unlock the assets, the scale of those assets, the domain expertise, the capital, the IP sitting on a shelf sometimes, the ability to sway industries and say, guys, we're committed to this. We need you to follow along with us. So again, maybe there's a big if at the beginning of that statement, but if you can do that, we've always believed you can actually have bigger impact faster than, a couple of folks in a garage trying to do it. Both models work and you can get those things collaborating too. But again, there is power in the scale and the assets of large companies if you can unlock that value.
Man, I'm curious, and I bet your listeners are too. What are the top 3 ways that you've seen effectively unlock or unleash that potential from large organizations? Because it's not easy to do. Organizations are fixed on their primary ways of doing business. They don't even, I think, have awareness of maybe everything that's sitting there that could be used, and then you're trying to convince them to use that and deploy that in a different way that's almost counter to where they're focusing. I'm curious, how do you overcome that roadblock, or how have you seen others effectively do that?
Yeah, it's always contextual. What we like to think of it in many ways is everybody wants growth. And so you think about a large publicly traded company and how they react to the markets and they operate in a quarterly cycle. A lot of it is thinking about what is your innovation portfolio going to look like in a different horizon, but also a different time frame, like 3 to 5 years down the road. And how do you concurrently go after more aggressive growth into new markets and segments that really don't distract from what you do with the core business? You brought up a lot of great examples again about the powerful culture leadership you had, even the foundational components of Gore, just being able to empower people. Ben talked about it earlier. Again, often, people look at ventures beyond the core because they're looking for a different type of talent. Doesn't mean the talent internally is not great, but it's kind of a meshing both of that talent and finding the right talent to basically, again, I always look it back to growth, taking big swings to solve really, really difficult problems. And again, entrepreneurship is the greatest tool to solve societal problems, and kind of how you looked at it earlier, how do we solve these really difficult problems? And you've taken kind of more of this circular approach, and now you've also kind of extended that into a broader ecosystem, bringing people. So, I think it's always contextual. I think given the fact that you have a little science kind of driven organization, is also different than working with like a financial institution. So again, I know Ben sure has got some other points to add to that.
I think you hit on it. To me, it's you need the culture that's nebulous, but nebulous in a way. But again, in Gore's case, like this very specific lattice structure, I think facilitates some of it. I think it always, to some extent, comes down to top-down leadership. If they're supportive of things, because they do control the dollars, they control the direction of the company. I think the third one is structure. So if we've got the right culture and the motivation, we've got leadership saying we've got to go do this, then it is a structure question. It's the how. How do we do it? And and every company, or almost every company, will have a stage gate model of some kind. That's a foundational component of it, but it's just one component. I think the discussions around, should we create a venture studio? How should that be created? I mean, one of the things I was going to say earlier was, in our experience, we've never found one model for a venture studio that works. I.e., you can't go into an organization and say, here's a venture studio in a box, use this, I guarantee you super amazing companies will be spit out the other side. It just never works. It's always contextual to the organization. But to me, structure. So do we have the room? Do we have the budget? Do we have the talent? Do we have the flexibility? I like optionality. I'm a big fan of this idea of, I don't know if we're building a spin out yet. Maybe it's a spin in. Maybe it's nothing. Maybe we should validate something, and then our CVC team should just make an investment instead of us reinventing the wheel. So to me, the org structure is really a key component to it. And I actually think most companies get that wrong.
Yeah, and I'll just add something quickly to that as well. I mean, again, the other most powerful piece, we talked about momentum, and structure thing is a really important building block, but it comes down to ability to execute, right? It executes fast. It's, and I think that's the idea. Like, a large organization can execute for sure, but the question is the speed of it. And a lot of people, even, we'll call it corporate ventures or businesses on the outside, they have a tough time executing at times because they're not hyper focused. And that's where, again, the talent really matters. That Ben, talked a bit about having the air cover as well from leadership. Not just a directive, I think, is also another important component to it. But again, it's an exciting time because I think this is kind of a new vehicle in many ways that gives back to Ben's point earlier about optionality.
Yeah, I completely agree with everything you said, and I've learned over time, like, what holds that together, or what allows one to navigate all that challenge, right? Because these systems don't always, right? They're probably not existent in most organizations. Exactly. But what allows the tolerance or the ability to learn and navigate and move forward together, I think, it's got to be an attractive option, right? I mean, like, I've been saying for a while now, like, if you're going to build a $50 million venture, $100 million venture, or you're going to build $1 billion, it looks the same in the beginning, right? It's going to take the same level of investment in time. I'm going for the $1 billion options, right? I want, if I'm going to put strategic options on the table, I want them to be able to drive meaningful growth for the organization with credible data to support them. And when you have that, I think navigating the challenges, right, of resources, of investments, of getting the mind space you need from leadership, we're going to be much more successful in getting those resources, getting that time, having the flexibility to try things differently. If we're really talking about optionality, that's options that are really going to move the needle, right? If we don't have that, I think we default to the conservativeness that will end up just killing the venture, not giving it the freedom it needs, or doing things differently to see what it needs to survive.
Yeah, totally agree. Yeah, that's the easy path, is keep doing what we were doing before and not try new things. So, Peter, I appreciate the time. We're actually already at time. Great conversation. Really appreciate you sharing all your experiences and stories at Gore, and look forward to staying in touch.
Yeah, thank you, Ben. Thank you, Marcus. It's been a real pleasure.
Thank you, Peter.